Inflation or deflation? That is the raging debate. Will prices continue to skyrocket higher, or is there a big crash in the future? That's the conversation that we are going to have today with one of my good friends, Brent Johnson. He recently said that if you believe additional quantitative easing is on the way, then you're actually a deflationist secretly. And if you believe that they're going to taper, that they'll stop printing so much money, then you're actually in the inflation camp. Now, we're going to decide what or discuss what that means. We're going to talk about the debt ceiling limit that's coming up and what they're going to do. What's happening with the dollar? Will it really gain strength or will it lose? We're going to talk about the IMF, what's happening with the bond markets, the currency markets, and so much more. And in addition, I just want to let you know that Brent is going to be joining me at a live event that I'm doing in just a couple of months. There's a link in the description down below if you want to come hang out with me, Brent, and another dozen or 15 of my good friends to talk about surviving the Great Reset. You've heard it, 2030, you'll own nothing, you'll be happy, but I'm not okay with that, and hopefully you aren't either. And so we're going to have 15 of the top experts in the world talk about what they see happening over the next couple of years, and more importantly, what you should be doing to survive and to thrive through this event. We're going to have actual things that you can learn, that you can apply, and even service providers of things that you might need. So anyway, there's a link down below if you want to check out that live event, but let's go ahead and just jump right into the interview with Brent. Hey everyone, welcome to another episode of the Market Disruptor Show. Today, I'm joined again with Brent Johnson, Santiago Capital. He's a friend, someone I talk to on a regular basis, and I am excited to have this conversation with him right now. Brent, thanks for joining me.
Absolutely, thank you. Some people probably don't know this, but before I made my move to Puerto Rico, you were one of the first people I reached out to. So I owe a debt of thanks to you.
Yeah, that was cool that we were able to talk like that. I want to dig into that. I want to talk about Puerto Rico and moving here for a minute. Before we do, of course, I know who you are, but why don't you just give us a little bit of background on what you're doing, what you focus on?
Sure. So long story short, I have a firm called Santiago Capital. It's a wealth management firm. I work with a little over a dozen families on their private personal assets, help them develop a customized wealth management solution for them. And then I actually go out and implement those plans, invest their assets, et cetera, et cetera. And, I do a lot of work on the global macro space. I'm kind of a student of history, and I'm always interested in what different countries are doing versus each other and what different asset classes are doing. And, obviously what's going on, especially over the last, call it 12 years, but certainly over the last couple of decades is pretty fascinating. So it's an interesting time to be doing it.
It is an interesting time to be doing it. I've been saying that I think history books are going to be written about this period right here. Yeah. Like, what the heck were they thinking? Probably. So I want to talk about, there was one tweet that we started engaging on and went forever. And so I want to talk about that. We'll talk about this pending debt ceiling and what's going to happen with that. Talk about the student of history and what are the parallels. We'll talk about El Salvador and what that is going to do. If we have time, we'll talk about trolling on Twitter. But before we get into that, because you're pretty good at it, before we talk about that, let's just talk about Puerto Rico for a minute. So we're both refugees from California. Like you said, I was kind of maybe the one that you first reached out to, and I kind of maybe eased it for a little bit. You're on the other side of the island. You're out in the city. Tell me what it's been like coming from, I think you were like Silicon Valley, Northern California, and now you're in the Caribbean.
Yeah. Well, what I find interesting about it is, I've been down here for 2 or 3 months now. And the reality is I probably know more like-minded people here in the 2 or 3 months that I've been here than I did in 20 years in San Francisco. Wow. And it's not to say that I actually love San Francisco. A lot of people would always ask me, like, how can you stand San Francisco? Doesn't it drive you crazy? And it did. I actually really liked San Francisco, and I liked the different people I met. I'm one of these people who doesn't like it if everybody's exactly like me. So I kind of like having the diversity and stuff. But, it just kind of got to be too much, for lack of a better word, and the trend just wasn't right. I still love California. I think California is one of the most amazing places in the world. They have a lot of problems they need to fix, but the transition here has been easier than I thought, because there are so many people who kind of thought similarly that came here for similar reasons. Now, I think it's no secret that there's some great tax incentives, and they make it easy to move here from a business perspective, and that was obviously a key driver. But there's other things as well, and I've been pleasantly surprised at how easy the move has been, and the way I've been welcomed in the community, so to speak. And, you know, it's interesting that there's a lot of people down here doing similar stuff. So I don't feel like I could have done it as easy. If I went to Hawaii, for example, yeah, it's another beautiful island, but the community's not there, right? Yeah. Like there's actually a community here where I feel like I've been able to kind of step right into, and so far so good.
Hey, hold up just for a second. I want to tell you about something. I just got something cool in the mail I want to show you, and it is this new sleek package I just got with a brand new credit card. This isn't just any credit card. This is a BlockFi credit card that's powered by Visa, and it's backed by Bitcoin rewards. So this is a Visa card. I can use it anywhere in the world that Visa is accepted, and the benefit of this BlockFi Visa card is that I get paid back in Bitcoin. Most of my other cards pay me in some sort of reward points. I get airline miles. I'm not very good at using those. They end up accumulating and I don't do anything with them. But getting to earn Bitcoin back with every single purchase is of course something that matters to me. Now, I know for a lot of people, they say that the price of Bitcoin is too high. So I say, well, you can always earn Bitcoin. You can get paid in Bitcoin, or you can just get cash back rewards on every purchase paid in Bitcoin with the BlockFi Visa credit card, used everywhere that Visa is accepted. And if you want to sign up for the Visa card that pays back in Bitcoin from BlockFi, there is a link in the description down below. Check it out.
Yeah, I think there's definitely something to that. It's almost like the Atlas Shrugged book, right? This Gulch, where like all the productive people went and started a new community. Not that it's exactly like that, but we are starting to see like this great migration, and people are fleeing California, and so they're going to Austin, Texas, for example. So probably would be a similar environment. Maybe the Miami area, of course, here. And so you have like all these productive people that are escaping one area for one reason or another and coming here. And so then when you come, like there's all, like you said, all these like-minded people that you plug into.
Yeah.
So.
And I think, and it wasn't strictly business based too, it's not strictly politics. It's a lot of stuff, we've talked about the fourth turning before. Yeah. It's just, there's politics, it's business, it's social. It's, it's really the society, the social part of it has been the biggest challenge for me, is how to manage the social part that's coming. And, we see that a lot with COVID. There's the people who are in favor of the policies, and there are people who are not in favor of the policies, and there's no middle ground, and it's creating divisions. And I mean, that's part of the fourth turning, right? That's what happens in these cycles of history.
Yeah. What did you think when you came over to Puerto Rico, especially coming from a big city like San Francisco? What did you think about the infrastructure, the roads, a lot of people think that it's super third world infrastructure, that you're going to get robbed everywhere you go. What did you think about that when you came over?
Well, the first thing I'd say with Puerto, I think there's perhaps this perception that it's not very, it's a beautiful nature island, but there's no infrastructure, and there's it's shanty towns, and everything was destroyed by the hurricanes. And there is some truth to that. I'm not gonna lie. There's potholes in some of the roads, and there's power.
California has those too, though.
But that's my point. Is drive around San Francisco a little bit. Your brakes get worn out, and your shocks get worn out pretty quick driving around San Francisco too. And there's some bad neighborhoods here, but I mean, I used to drive through the Tenderloin in San Francisco. Drive through the Tenderloin sometime and let me know how you think great San Francisco is. So I've kind of been pleasantly surprised, to be honest. Now, don't get me wrong. There's some, you don't show up here and say, "Wow, this is the most amazing place in the world."
Right.
But that's why the opportunity is here. If it was the most amazing place in the world, there wouldn't be any opportunity, right?
Yeah.
And so I've been pleasantly surprised at the infrastructure. I have cable TV, high-speed internet. We have the biggest mall I've ever seen.
Yeah.
If you want to go to the mall, I haven't struggled to find anything that I needed. I needed to get an ironing board one time, and that was a little hard. But other than that, I can't really. But again, nothing's perfect. But I kind of like that it's not perfect. I was telling somebody the other day that when you watch a James Bond movie, right? He's not always in a chauffeured limousine going to some black tie party in London. It always starts off in some shanty town somewhere, and then it transitions, and that's what makes it exciting. It's not all this, glitz and glamour. You got to go through some rough areas here and there to kind of make it exciting, and I appreciate it.
Yeah, I would say, especially coming from California, I mean, there's plenty of areas in California that are suspect for sure. And
Right.
so, like anywhere, there's nice places, there's bad places. But to kind of agree with you, I would say that I was also pleasantly surprised. So many people were like, "Oh, wait till you go there, you're not going to like it." That I guess maybe I was expecting less. And man, the roads are great. Nice
Yeah.
cars everywhere. People are nice.
Yeah.
I know there's some people online that aren't happy with, business owners moving over here and starting businesses, but I haven't experienced any of that. For everybody listening, I'm on the other side of the island than Brent, and I'm on the more rural side. So I don't have quite the community, but we're getting there. So we're gonna
Yeah,
twist your arm to get out here sooner or later.
it's like I live in Miami and you live in Orange County.
Yeah, no, I mean, it's more like you live in San Francisco and I live in Orange County.
Yeah. Okay. Fair enough.
Because I mean, it's about, it's 2.5 hours, to get
Yeah,
over
yeah.
there, depending on
Yeah.
what the traffic's like. So that's cool. I made 2 videos on YouTube about coming to Puerto Rico, and people are always asking me like, what's it like? And so I'm glad to get that info from you.
Yeah.
So you obviously spend a lot of time focused on the macro. You're the milkshake man, so you're kind of famous for this theory, which we talked about. I'll have my editor link it here. Our last conversation talking about the milkshake theory, which is the dollar will suck up all the currencies of the world. But really, there was one tweet that, there's a bunch of tweets we engage on, but there was one tweet that popped up recently that I chimed in on, and it went forever. And you said that if you believe in more QE, quantitative easing, if you believe that more QE is on the way, then you're secretly a deflationist. And if you believe in tapering, so the government buying less bonds or injecting less money, then you're secretly in the inflation camp because it's a cause and effect. Could you explain that?
Yeah, well, I think a lot of people get the cause and the effect messed up. I think a lot of people think that the QE programs or the monetary policies are the cause, and as a result, there's going to be high levels of inflation, or something is going to happen. Asset prices are going to rise because of the monetary policy, but it's backwards. Monetary policy is always reactive. The Fed is never ahead of anything. They wait to see what's happening and they react to it. So the monetary policy is the effect. In other words, if they are doing more QE, it's because there's deflationary pressures in the economy and they're reacting to the deflation. So if you think there's going to be really high levels of inflation, then you must think that they're not going to be doing more QE, right? It's backwards. People just have the cause and the effect messed up. If you think that if more QE is on the way, they were going to do that because the inflationary or the deflationary effects of the economy are overweighing what they're currently doing, and they're going to have to do more of it to try to offset it. So I think that's the main point I want to make is don't think of the central bank is going to do this and therefore that. Think of the economy or the world is doing this and therefore the central bank is going to react to it.
Yeah, I mean, I definitely get that. But it seems like they've sort of changed, right? So I think, we saw QE really coming on in 2008 and it was reactionary and it was too late, maybe too little too late. And it seems like now, and maybe they got caught off guard here in March 2020, but it seems like they want to lead the market now, right? It seems like maybe they've learned from their past mistakes of leading or, lagging behind and being too slow. And now they're trying to preemptively move because we see, well, and maybe they weren't believing it, but it seems like they were saying, even though the economy looks like it's better, job numbers we're expecting to get better, we're still going to keep pumping no matter what.
It does seem that way, but I just don't think it is that way. And the reason I say that is go all the way back to 2008. They would do these programs. Everybody would say, "Oh my God, we're going to have high levels of inflation. The market's going to go take off," and it would, but then it would start to roll over. Right. And then they'd have to do, and you get this short-term thing and then it would roll over. And this time has been more forceful and they've done bigger numbers, but they haven't really changed what they've done with the exception of the PPP loans. Right. And if they were to come out and do more PPP loans and not just do QE, but do QE with addition to fiscal stimulus, I would expect another big jump. However, I don't think that they can pass another emergency PPP program with markets and prices the way they currently are. Now, if things roll over and markets start to go back down and you start to see some asset prices start to fall and inflationary pressures wane, then I can see them reacting to that, coming out and doing more and pushing it higher. But I maintain that they are a reactionary body. I do not think that the Fed ever anticipates anything. Now, I can be wrong on that, but I've never seen them be ahead of the curve as long as I've been doing this. Doesn't mean it's impossible. It's just I've never seen it.
Well, even to the point, even if they were ahead of the curve, it would still be reactionary, right? They would still be doing it because they were anticipating it, which is still reactionary either way. So the question that I have, and of course, this inflation deflation is such a nuanced argument, right? So, like, for example, yesterday, I don't know if I'm sure you saw somebody from the White House was talking about how if we just remove meat from CPI, we don't have inflation. I mean, that was the most ludicrous thing I've ever seen. But if we look at this, inflation, deflation, and so if they are reactionary, even if they're trying to preemptively move, which is still reactionary, I guess the question is then, do we think they have enough firepower to overcome the deflationary forces? Or will they wait, I guess, and maybe run out of ammo?
Well, so I think that you hear a lot of this, the Fed is running out of bullets. They don't have any more tools. Interest rates are at zero. And I think that's wrong. I think that central banks have a lot more firepower. They can take rates massively negative. They could ban cash or whatever. I think there's a lot of things that they could do. But again, I think that would be reaction. Their extreme reactions would be in reaction to extreme events or externalities, right? And so, and I think, if you've ever listened to people like Lacey Hunt or Jeff Snyder or Steve Van Meter, I think, and I don't want to speak for them, but my impression of what they're saying is it's not that we won't have short-term inflationary pressures. It's not that prices won't rise. It's just that if it's allowed to play out, the debt is so big, the debt will eventually crash the entire economy and all prices will fall. And then, and again, I'm not speaking for them, but I think that's the point they're making. And for the Fed or the central banks or the monetary authorities to overcome that, they need to not just do what they've been doing, but they actually have to take more steps than are legally allowed to take. Now, it doesn't mean that they won't eventually do it.
Right.
And I think that they will eventually do it. I guess my point in this whole debate has been not that we haven't seen inflation. I think it would be very hard to look over the last year and say prices haven't risen, right? It doesn't take a PhD in economics. Well, maybe a PhD in economics actually might keep you from seeing the prices rise.
Right.
All you got to do is walk out and talk to somebody on Main Street, prices are rising. My argument has been that it will not continue at the same pace unless they do something differently and do
Interesting.
it. And so if these things aren't changed, we will eventually, and whether it's 6 days from now or 6 months from now or next year, I don't know, but we will have another rollover. It's just like, look from 2015 to 2018, markets went up. And then in December of 2018, crash, right? And then they went up again and crash. And the deflationary periods are very short because they're so severe. And then you have the central bank come and bail it out, right? And the inflationary periods are longer because the central bank is there. They're pushing and they're supporting. But it's like the stair step up and the elevator down, right? And I think, again, the point I make is that if something doesn't change and if they don't do additional steps to what they've already done, not just more of what they've already done, but actually different steps than what they've done, we will have that elevator shaft down again. And again, I wish I had an indicator that told me exactly when that was going to happen.
I know, right?
But I don't.
Where's the crystal ball?
Yeah.
Your clients would like that a lot better too.
They sure would. I think the point I just want to make is the people who say they're never going to quit and they'll eventually end at high levels of inflation. I don't necessarily disagree with that.
Okay.
I guess my point is I think for them to be politically able to take the steps that are necessary to take to get this really huge asymmetric hyperinflationary move that everybody's been expecting for 40 years or 50 years since we went off the gold standard, some changes have to be made. And those haven't been made yet. Now, I'm not saying they won't be made.
Right.
But I think but they can only make those moves in some kind of an extreme circumstance. And so if you get another big hard sell-off, if you get another COVID, I mean, think about it. Last March, markets were more oversold last March than they were at any time, I think, in history. Certainly more than in 2008. And I was in the middle of it in 2008. Well, that was a pretty crazy time, but I had never seen markets more oversold than last March. And that allowed them to come out and do all of these, programs that they did. And,
Right.
We've seen it. And so there was an extreme market event. They came out and did an extreme reaction. So we've seen this extreme, market reaction to their extreme actions. But I think it would take another extreme market event to allow them to do what they do, to do what they would be necessary to do to keep it going at this rate.
Yeah.
And you're already starting to see pushback on this. The senator from West Virginia, Manchin, he's already said he's not going to vote for the whole infrastructure bill. Of course, the Republicans aren't going to do it. They want to do it, but for political reasons, they have to push back initially. But if we get a 10 or 20% market correction in the next couple of months, that'll allow them to redo it. Do you know what I mean? But I think it'd be tough for them to just come out now with inflation pressures the way they already are and just, introduce a new $5 trillion package or whatever it is.
Yeah. Well, I mean, yesterday, the New York Times said they ran an article saying that all the experts agree that the world's going to die with climate change, and they're urging this. They wrote this collective letter urging the government to take just as much force and effort to tackle that as they did with the virus. And so something like that, with this extreme emergency, gives them an excuse to potentially change the rules that you say.
Sure.
And I think there's different types of inflation, and you tell me what you think about this, but it's like if they just print money for infrastructure, obviously that's different than if they keep sending out stimulus, right? So one goes to the markets or one goes, but if they were to say spend a bunch of money in the name of climate change to save the world, then they would probably spend money into certain projects, green light ESG narratives, things like that, which would then probably cause inflation, I guess, back into the asset prices around those areas, which would maybe eventually trickle back down to the people. But it'd be different, I guess, than just keep pushing stimulus.
I think that's my opinion. And then, to your point, I do think that, this green initiative is going to be one of the biggest market drivers over the next, call it, 5 years. Now, whether that actually happens over the next 5 days or 5 months again, I don't know, but I do believe that they are going to use a climate crisis as a means to fund projects and fund initiatives that the government wants to fund. I think things like carbon credits are going to be, I think they're going to go through the roof. And I think, green projects and green bonds are going to get funded, and they're going to get preference over the traditional, bad energy industries, et cetera, et cetera. And I know there's a lot of people out here that will say, this is a scam. It's not really, it's not really the way it should be. And I'm not going to argue that. I'm not saying that this is the way it should be. I'm just saying this is the way it's going to be.
Yeah.
And I think that's we've talked about this before. I think that's a big mistake that investors make, is what they want to happen versus what's actually going to happen.
Yeah.
So anyway.
Yeah. You have to invest in the market as it is, not as you think it should be or as you want it to be.
Yeah.
Cuppy and I had a pretty good conversation about that. He's long energy, oil and uranium, because he's betting that whole ESG thing fails at some point.
I just wanted to take a second to explain to you one more time just how cool having this new BlockFi Visa credit card is. I've started to move a lot of my bills over to get paid from this. Of course, all my business supplies, I'm starting to pay for this, my advertising budgets, and I'm starting to run as much as I can through it because I'm getting paid a percentage back of every single transaction in Bitcoin. We want to save in Bitcoin because Bitcoin is an asset that goes up in value because of the deflationary nature of it. And we want to spend our fiat. So I'm spending my fiat through my BlockFi Visa card, and I'm getting back Bitcoin that I can save and I can hold. I expect it to go up in value a lot. I expect to hold my Bitcoin. I'm going to pass it to my kids and my grandkids, and hopefully my great grandkids will have my Bitcoin one day. So I'm going to save it. I'm going to spend my fiat through this card, and I'm going to earn back Bitcoin that I'm going to save. If you want to get one, there's a link down below.
It seems like, it seems like, right, the central banks have been inflating. If you think about the money supply as like a balloon, like they're inflating the money supply. Last year, they increased the money supply about 24%. And then we saw prices go up about 24%. Homes actually went up exactly 24%. Used cars up 30%. S&P and NASDAQ were up 20%, So it seems like they increased the money supply 24%. Prices go up about 20%, give or take, depending on what assets you're buying. Of course, lumber went up 300%. Homes in Kansas probably went up less. So one, I guess, let me just ask you first, do you see that correlation, right? They increased the money supply 24%. Prices seem to have gone up 25%.
I see it, but I'm not saying there's no causation there. I'm not saying there's no correlation. I'm not saying it's totally just coincidental, but I do also think that that number's a little bit misleading, and I'll tell you why. The 24% increase in the number of dollars, or the monetary base. That is true. If you measure the US into a year ago versus, it went up it went from like 16 trillion to 24 trillion or whatever. I think that's the number. The problem is that $16 trillion base is not the right number when you're thinking about dollars, because the euro dollar market is not factored into that. So in other words, if you go look at Europe or Canada or China or Japan or Australia, everybody's monetary base or M2 went up dramatically.
Right.
Now, a lot of them weren't quite the 24% number, right? Maybe they were 18%, 17%, 15%, but they all went up dramatically as a reaction to the COVID crisis. Now, their denominators are correct because most of those other currencies don't have big markets for their currency outside their domestic market. But the US dollar, there's a bigger market outside the United States for dollars than there is inside the United States. That's called the euro dollar market. And we can't get into the full details of the euro dollar market today, but it's the biggest market in the world. And so when the US prints money, they print it for the whole world.
Right.
They don't just print it for the United States. So if you factor in that euro dollar market, maybe the increase was 5% or 10% or maybe 15%, but it wasn't 25%. But to your point, I think you do see some correlation there. But again, they would have to do that again year after year after year.
And that was going to be my next question.
to continue to see the price rate rise at the same rate.
Right.
Now, that doesn't necessarily mean prices are going to crash. Maybe they had this big spike and they're just going to level off. But I don't think they're going to continue that same uninterrupted rise that we've seen for the last 24 months or the last 12 months.
So that was going to be the next question was, do you think they'll slow down the rate? Because, as we've already kind of set the stage, I mean, there's obviously stimulus, all kinds of stimulus, potentially ESG narratives now, save the climate narratives. The economy is seeming to not pick up a life of its own. And so I guess just the question is, do you think they continue printing that much or not? And I guess you're saying that you don't think they will continue at that rate.
I don't think that they will. So therefore, that's why I think that we are moving into either a disinflationary environment or a market sell-off or some kind of a correction before they then come in and perhaps try to push it higher again. But, I've said this a lot recently is I'm not certain of this.
No, of course
based
not.
on my research, I think that more likely than not, we're moving into a disinflationary time. But I could be wrong, and I don't think that everybody should go out and put all their money on my thesis just because I think that that's not going to happen. I'm a little surprised at how certain everybody is right now. To me, it's the most uncertain time I've ever seen. But everybody I talk to is so certain that they know how this is going to work out, and they're all in on gold, or they're all in on ESG, or they're all in on the deflationists are all in on bonds. Bitcoin, everybody's all in on Bitcoin. There's no nuance anymore. I mean, I'm exaggerating a little bit, but not too much.
Well, the problem is, and this isn't just markets. This is everywhere in life, myself included, is that we used to have a system of law, right? The Constitution had a rule of law, and we all knew what those laws were, and we could plan our lives. Today, we're ruled by men that are constantly changing the rules. So whether that be, I don't know if I should leave California or stay in California because I don't know what Gavin Newsom may do next month with the policies.
That's right. So
I can't plan my life there because he's changing laws. But even to the markets, we could look at normal market cycles and then we could kind of gauge where they'd go next. But what we're trying to guess is what's Jerome Powell's head going to say? And there's no way for us to know what's inside his brain. Right. And so
that's right. Yeah, it's really interesting. Like, to a certain extent, I hate politics. It just drives me nuts.
Yeah.
But I also find it very interesting because, well, not only do I find it interesting just from a personal level, but politics and government policies and monetary policy plays, I feel like, a bigger role now in the markets than they ever have before.
Of
So
course.
I don't, even though it drives me crazy and I hate it to some extent, I don't have the luxury of not paying attention to it.
Yep.
Like, to not pay attention to monetary policy or government policies right now, I think is a very dangerous thing. Unless you're just going to go all in on your one asset, whatever you think the long-term solution is, you go into that one asset and you just sit there and wait, and then maybe you can tune out all that stuff. But if you're trying to actually actively manage a portfolio, on a consistent basis over the next in the short to medium term, then I don't think you can ignore it.
Yeah. So if you look at this money supply over the last 50 years, we're 50 years off the dollar. The money supply has inflated, right, like a balloon.
Yeah.
And it seems like it's always trying to correct and deflate, and then the Fed's pumping it back up and trying to get it.
Yeah.
But it's almost like the bigger the hole gets, or the bigger the balloon gets, the harder it gets for them to fill that gap. And so, kind of to your point, each time there's a correction, they pile back in, but like it has diminishing returns because the hole just gets too big. But now there's there's something new in the world today, and I think we're seeing this battle play out. And so there's safety boats now. There's lifeboats that are getting off the ship, release valves, if you will, and we're seeing people leaving and going to Bitcoin. Yesterday, or time of this recording, 2 days ago, the country of El Salvador made it a reserve. And so we can see that, the IMF and ECB, Christine Lagarde and whatnot, they're saying innovation is a threat to the financial system. Really, innovation is a threat to their monopoly on the financial system. But so what do you think about, having a life raft, which they seem to be wanting to burn? They don't want us to have these outlets. But what do you think about now that there is, and there's a country that has it? Do you think that changes the effect that the Fed central banks will be able to, reinflate or pump these back up?
The short answer is no. I don't think it changes much. But I would also say that I also think you're absolutely correct in that people are waking up to the fact that the system is not quite right. Like, a lot of people have known it for a long time, but it's becoming more and more evident that there's just a lot of, corruption and graft and us versus them, and maybe they don't have our best interests at heart. That's becoming more and more prevalent, right? And again, that's part of the fourth turning. That's part of the cycles of history. With regard to El Salvador, well, the other thing I need to say before I get too far into this is I talk about this stuff a lot. And I think to a certain extent, my views have been not misunderstood, but perhaps not taken in the right context. My job is to manage other people's portfolio, right? And their goals may not be the same as my goals. Their values might not be the same as my values. Their politics might not be the same, et cetera, et cetera. So they didn't hire me to be a revolutionary, to go out and fight for a certain cause. They hired me to get them through the revolution. Yep. and have them land safely on the other side of it, whatever happens, right? Not just the revolution, inflation, deflation, market events, politics,
sure,
social, all of that.
Through the fourth turning.
Through the fourth turning, right?
Yeah.
And so, if someone called me and said, I want to be a revolutionary, I want to take on the system, what's the best way to do it? I might point them towards Bitcoin, right? But that's typically not the call I get. Okay, so that brings us back to Bitcoin. Like, I do think that there's more of these lifeboats, these outlets, these alternative systems are popping up, and I think it would be hard to argue that Bitcoin is not the most popular or has the best chance or whatever you want to call it, right? But I think at least it's my impression that there's a lot of people in the Bitcoin world who thinks that this is a given. It's a fait accompli that it is destined to beat the fiat system. And I don't think that's the case. And I don't think that the governments are powerless against it. I think that there's many things that can be done. And I do like what you were saying earlier. I think we were talking before we started on here, is that the way the thing with El Salvador started is it started at the bottom. Individuals wanted it, and it kind of bubbled up to the government rather than starting at the government and getting pushed down. So I think that movements like that will continue. I just think that they're up against a very big battle. I don't think there's a proper appreciation for how strongly the governments will protect their monopoly. So that's kind of where I come down on it.
I've always known that, right? It's going to be the battle for the ages, of course.
Yeah.
But I didn't really want to talk. I would love to continue that part of the conversation.
we can talk about that for hours.
Yeah, we could talk about that for hours, and we will, because I'm going to drag you out here to my side of the island, and we're going to have some drinks, and we'll talk about it. But specifically, what I was asking, I guess, is that it looks like the Fed's tools are becoming, they're diminishing returns, as I was saying, right? The hole's getting too big.
Yeah.
And so, like, how long can this go on for? Like, obviously, we always ask ourselves that, like, can they pump it up one more time? Can they pump it up two or three more times? Like, eventually, the law of diminishing return says that it just isn't going to work. But I guess what I was asking is, do you think having alternative systems makes it happen even faster? Because if a good chunk of the world moved out into an alternative system now and aren't using the dollar anymore, well, all of a sudden the dollar starts to lose its power pretty quickly. And already the whole world's already de-dollarizing. We've seen it drop, from 80% to 50% of transactions. That's already happening. And now this other alternative system that we see with nation states like El Salvador now, after El Salvador in 2 days, I think it was Panama now came on and said they're going to do the same thing. And so, do you think that hurts?
I think it probably does bring the decision forward, right? It'll bring the ultimate day of reckoning forward, because individuals may force the issue, right? I think there's one you mentioned something there that I hear a lot, and I understand the thinking. I think it's deeper than that. Remember we were talking about that graph that shows you get into a thing and you learn a little bit and you're, I know everything. And then the more you're into it, it kind of slides off and you realize, holy shit, I don't know as much as I thought I did.
Yeah.
I think that plays out a little bit in the whole de-dollarization thesis. And let me tell you what I mean by that. There's no doubt in my mind that, again, there's this growing awakening in the world that, the dollar system is perhaps not the best system. The US has abused it, for lack of a better word. They're a bully. Not only that, but for a number of economic reasons, it doesn't make sense, or countries would be better off not using the dollar. So there's no question that is a theme, and that people are trying to de-dollarize, or countries, institutions are trying to de-dollarize. The problem is that the bombs have already been placed. And what I mean by that is the dollar is so entrenched in the global economy that there's huge dollar debt markets that exist all over the world that have nothing to do with the United States. Again, this is the euro dollar market. So, and what I mean by that is China has extended dollar loans to countries in Africa, or companies in Africa, or parts of their One Bridge, One Road initiative, right? French banks have extended dollar-based loans to companies in Turkey. Same thing all over the world. So there are tens of trillions of dollars of these dollar-based loans outside the United States that have nothing to do with the United States. And so if people start to de-dollarize, or if institutions start to de-dollarize, or if the world starts to de-dollarize, then that means there's less dollars circulating, which means it's harder to pay off.
But couldn't some of those people say, you know what, don't pay me back in dollars, pay me back in gold, or pay me back in euros, or pay me back in yuan?
Well, they could, but why would they?
Just because we saw today an article, Gisele Bundchen, Tom Brady's model wife, said she doesn't want, you actually posted it, right? She doesn't want to get paid in dollars anymore. She wants to get paid in euros, for example, right? She's owed dollars per her contract, and she's asked to get paid in euros. Now that's a model, not a country. I get it. But at some point people might go, I don't want to get paid back in this Venezuelan dollar that's inflating. I'd rather get paid in US dollars. Maybe.
Well, but to think that, then you've got to accept that all these institutions all over the world are now going to become currency traders rather than just offsetting their liabilities, right? Because they have dollar liabilities too. So they're getting paid in dollars for the loan they extended, and they use those dollars to pay off their dollar liabilities.
Right. So the whole chain has to get renegotiated.
So if everybody does it at the same time, the dollar's toast.
Right.
Right. But if they don't, and they try to do it as a one-off, then their dollar funding costs go up, they get in trouble, and it starts a chain reaction when all of a sudden you get contagion. So again, it's not that it's impossible. It can happen, but it's just not as easy as many people think.
Yeah.
And so, if those dollars get defaulted on, that's the other thing is people say, well, what if they just default on the debt? Well, if they default on the debt, they're not defaulting on the United States. They're defaulting on another country that issued a dollar-based loan. So it hurts that country. It actually makes the US stronger. So on a relative basis. So I think there's no question in my mind that there is this initiative or this desire to de-dollarize and get out from underneath it. I just don't think it's going to happen as easily and as peacefully as many people think it will. And I think that, as you know, you kind of already know my thesis. I think that leads to a lot of problems.
Right.
Yeah.
Well, one thing that we probably are pretty certain about is there are lots of problems ahead. that's the one
sure.
thing.
That's
The one thing we can be certain about.
Yeah.
I know we got to start wrapping it up, but maybe we'll just, we could dive into each one of these and spend so much time. You've mentioned a couple of times the book, The Fourth Turning. You know, I know you're kind of familiar with some of the work I've been doing on these bigger cycles. So the fourth turning is an 80-year cycle, but then there's 3 times 80 is 250-year cycles. And so I think per the fourth turning, every 80 years there's this populist regime uprising cycle from collectivism to individualism, and now we have like this revolution cycle. Yesterday there was millions of people protesting in Brazil. I'm sure you probably saw that. It's happening all over the world. And we're seeing like peak globalization, right? They're pushing harder than they ever have, but then equal force gets equal reaction. So now the world's erupting. It's pretty, when you've studied history like you have and I have, it's pretty easy to see kind of where we're at in this thing. What's your take on that and how that plays out over this next decade?
Well, so I think you're absolutely right. I mean, and the whole world's kind of in it, right? It's we're seeing this move, at least at the individual level, kind of a move back towards nationalist ideas, right? Or not, maybe I shouldn't say at the individual level, but we've had this big globalization move, and now it's going more. Trump started with the "Make America Great Again," right? But you see it in other countries as well, and you start to see more nationalistic tendencies. That unfortunately, the world from an economic standpoint, it got so not centralized, so cooperative, right? And that's why with this move
or centralized
nationalization, and then exactly, and then with COVID, it's starting to get decentralized. Potential supply chain breaks and potential global supply chains rather than one global supply chain, and that's a time of kind of, again, great chaos. I am of the opinion my impression is that a lot of people that are familiar with this fourth turning and these cycles of history understand that we're in kind of this uncertain time, but it's my impression that a lot of people think it's going to happen and it's going to be over fairly quickly, and the spring is pretty close. Like, we're going to have this big event, it's going to be really bad, and then everything's going to be great. I think we're maybe in the early part of the fourth turning, and I think it could last another 10 or 15 years before we're actually fully through it.
Yep.
Unfortunately, I would like to think that we're almost through it, but I just don't. I mean, at least in the West, we're starting to, you could argue we've had 10 or 15, maybe even 20 years of frustration and anger and pain and, problems here, there, but we haven't really had the deep hurt, yet. And I think we have to go through that. So I kind of feel like we're in it, but I think that this whole thing could take, another decade to play out. I don't think it's going to play out in the next 2 or 3 years. It could. I can't rule it out, but I think it's going to take longer than most people think.
Well, that's a whole conversation that we're going to have another time, because I'd love to just go through that. I would also agree that I'm calling by the end of the decade. So I think by the end of the decade, we're on the other side of this. I think we're probably halfway through the last 20-year cycle. The next couple of years are probably going to continue to get worse, unfortunately, which I'm not super happy about. But I think by the end of the decade, we'll be on the other side of it. And I do imagine a world of great prosperity and hope. So I'm excited about that. But we could continue talking about that for a long time, which we will at another time. But I think we've covered enough for today, Brent. So I know you got a hard stop, so we'll go ahead and sign it off. But appreciate you coming along. Now, I know you're obviously, you run your fund, Santiago. And I don't know if there's anything else you want to push people's attention to.
No, I mean, I do a lot of these. I enjoy coming on and talking to you. If anybody wants to follow me, you can look up Santiago Capital on Twitter. You can go to YouTube and type in Brent Johnson and Santiago Capital, and you get a number of different links. I'm always happy to interact with people. So, that's the way we all learn.
And you're super active on Twitter. We're going to link to it in the notes below. And your troll game is strong. I wanted to talk about that, but we ran out of time.
It's funny. I will accept the fact that I'm a Twitter troll, but I actually do it with good intentions. I'll say that. I've learned so much from Twitter. I've met so many interesting people.
Yeah.
I think it's a fantastic tool. Don't get caught in the silo. Follow people you don't like. Interact with people you don't agree with. That's the best way to learn.
Yeah. Yeah. All right. Thanks, Brent. Appreciate it.
Cool. All right, man. Thanks.
All right. Now, I hope you enjoyed that interview that I just did with Brent Johnson. As I said at the beginning, he is going to be joining me at a live event I'm doing in just a couple of months, Surviving the Great Reset. 15 of the top experts in the world talking about what we should expect to see over the next couple of years, but more importantly, practical information of what we can be doing to protect ourselves to survive and thrive as this change happens. There's a link in the description down below. Click on it, and I love to see you there so I can hang out with you. You can meet everybody else. I'll see you there.